Your lender told you your payment would be $2,400 a month. Your actual payment, $3,736. That difference is the difference between comfortably affording your home and being house poor before the end of year one. In this video, the first of a three-part series, I'm going to show you exactly why your real monthly payment is so much higher than the number on your pre-approval letter. Let's break it down. Most buyers only think about two things when they calculate their mortgage payment. How much am I borrowing? That is your principal. And what is the interest rate? That's your interest. But lenders use a completely different formula. It's called I. That stands for principal, interest, taxes, and insurance. Now, here's how it works. When you get a mortgage, your lender sets up something called an escrow account. Every time you make a monthly payment, a portion of that money goes into your escrow. Then when your annual property tax bill comes due or your insurance premium needs to be paid, your lender pays those bills on your behalf using the money in the escrow account. So you're not just paying back your loan every month, you're also pre-funding your taxes and your insurance. 12 months of those costs spread across the year and collected as a part of your monthly payment. That means your mortgage payment has 4 parts, not 2. Principal, interest, taxes, and insurance. And here is the part that catches people off guard. When your insurance premium goes up, and it probably will, your monthly mortgage payment goes up also, even if you have a fixed rate mortgage. Your loan payment, the principal and interest portion, stays exactly the same for the 30 years, but your escrow payment increases to cover the higher insurance costs. That is why your payment is not fixed, even on a fixed rate loan. Your lender quotes you principal and interest, but they collect principal, interest, taxes, and insurance. And the gap between those two numbers is where buyers get into trouble. So how much does insurance actually add to your monthly payment? Well, the national average for homeowners insurance is about $2,500 per year. But, and this is a big but, where you live changes everything. Let's take Hawaii for an example. You might pay as little as $55 a month for insurance. In Vermont, about $77. In New Hampshire, $86. But in Texas, the average is between $320 and $392 per month. Per year, that is between $3,800 and $4,700. Texas ranks in the top 5 most expensive states in the country for homeowners insurance, paying roughly 60% above the national average. And in Florida, it's even worse, nearly $600 a month in some areas. Oklahoma is close behind at around $480. Let me put this into perspective. If you're buying a $400,000 home in Texas, your insurance alone, just homeowners insurance, nothing else, could add $350 or more to your monthly payment. This is before property taxes, before mortgage insurance, before HOA dues, before anything else. And here's something most buyers never consider. Here's the deal. I make free videos for you. I actually know what I'm talking about. And if you implement, it will help you and or your family get onto the property ladder. The only thing I ask is that you hit that subscribe button and the notification bell. 2 homes with the exact same purchase price can have completely different monthly payments, simply because they are in different zip codes with different insurance costs. Location does not just affect your purchase price, it affects your payment every single month as long as you own the home. Let me put all this together with a real world example. $400,000 home in Texas, FHA loan, 3.5% down, 30-year fixed rate at 6.8%. Here's your monthly payment broken down piece by piece. Principal and interest, about $2,470. This is the number your lender quoted you. This is what most buyers calculate. This is the number on the pre-approval letter. Property taxes at a 2.2% rate, about $733 per month. Depending on the county, city, and school district, your rate could be higher or lower. but budget for at least 2%. Homeowner insurance, about $350 per month. That is the Texas average for a home at this price range. Your actual cost could be higher depending on the roof, the claims history, and the zip code. And then there's the mortgage insurance. FHA mortgage insurance premiums, or MIP, about $183 per month. I'm going to do an entire video on this next because mortgage insurance is a cost most buyers don't plan for, and it works very differently depending on whether you choose an FHA loan or a conventional. So your total monthly payment, your PITI, in this example, is $3,736. Here is what blows people's minds. Insurance and taxes alone account for roughly $1,266 per month in this example, about 34% of the total payment. So if you only calculate the principal and interest, the number your lender gave you, you would think your payment is $2,470. Your actual payment is $3,636. That is a difference of over $1,200 every single month. That is the difference between getting approved and getting denied. That is the difference between building wealth and being house poor. That is the difference between staying in your home and having to sell within 3 years because you can't afford the payment. So that's your real monthly payment. Principal, interest, taxes, and insurance, PITI. Most lenders quote you 2 of those 4 numbers, but they collect for all 4. And the 2 that they don't quote you, taxes and insurance, can add over $1,000 to your monthly payment, like in the example above. But there is one cost in the breakdown I only mentioned briefly, mortgage insurance. Whether you're using an FHA loan or a conventional loan, if you're putting down less than 20%, you're carrying a second insurance cost every month on top of your homeowner's insurance. In the next video, I'll break down the FHA MIP versus conventional PMI, how each one works, what they actually cost in dollars, and when they finally go away. For some of you, that video could save you hundreds of dollars a month. Click the video on the screen right now to watch it. And if the video helps you understand your real number, hit the subscribe button, because in video 3, I'll give you the 8-point checklist to run through before you make an offer on any home. Until the next time, you guys be good to one another, let grace abound, and most importantly, stay blessed. Indeed.